Here the numbers are hitting the wire. Let's start out with the employment cost index. We're expecting a number, just shy of 1%, up 8, 9 tenths, and that's exactly what we received. Up 8 tenths, up 8 tenths. And how does that fit in? Up 8 tenths is the smallest month-over-month cost index variable going back to June of 21. June of 21. So that's pretty good. Second quarter of 21. Now, let's look at personal income and spending. There's a lot of categories here. There's 7, so bear with me. On the income side, exactly as expected, up 0.3%, and up 0.3 equates to July. To find a higher number, you go back to May when it was up 0.5%. Now, let's look at spending, shall we? Spending was a bit on the light side. Last month was the second lowest reading of the year. It popped up a bit, up 0.5%. Up 0.5. That is really a nice number, and that equals where we were in July. To find a higher number, you go to March of this year when it was up 0.7 tenths. Now, let's go to real spending, shall we? That's up 0.4 tenths, another nice beat. If we look at the PCE price index month over month, up 2 tenths, exactly as expected. A little hotter than our 1 tenth last time. To find a higher number, you have to go to April of this year. Now, let's look at the year-over-year price index. That came in at exactly 2.1, which was expected, but it is 1 tenth smaller than our last look at 2.2. 2.2 in and of itself was the lightest since Dec of 21 when the comp was 1.8, so we remain in that same comp category. Now, let's look at core numbers. On a month-over-month core PCE, up 0.3 month over month. That actually is the hottest number going back to March of this year. And finally, number 7, core year-over-year PCE. And that number comes in hotter than expected at 2.7. We were looking for 2.6, but it equals last month, 2.7. And 2.7 actually on the core number, well, if you look at that, that would be the biggest level going back to 2.7. That would be since April when we were hovering at 2.97, rounded up to 3. Now, we still have 2 categories left. Initial jobless claims, 216,000. That's about 14,000 lighter than expectations, and that is definitely lower than the 228 slightly revised last week. But there's many asterisks here. Many economists, our own favorite Peter Bookvar, there's a lot of noise in this number due to storms, so it's hard to tell if it's getting back onto its proper GPS. And I would also put out there that many thought it would actually be higher based on certain effects. So we want to monitor that. And on continuing claims, the metric of 1.8 million now becomes the 21st consecutive week above that level, 1,862,000. That's actually a bit lighter than expectations, and that follows 1,888,000. After all that, how did the market synthesize these numbers? Well, we saw yields in the 10-year move up to 4.30. Now they're back down to 4.28, exactly where they were before any of the data hit at all. A 2-year more susceptible to potential issues regarding inflation, the Fed, and the strength of the jobs market. Well, it's now at 4.16. It was 4.18 prior to the number. So you could actually say, a little bit better news. I'm not sure exactly where they see the better news. We did see some inflation numbers a little warmer, some subtly cooler, but all in generically. The only surprise really was claims, and I'm not sure that really counts. As far as Jim Grant and the vigilantes, I know there's an article in the Journal today that the next administration is going to inherit a great economy. I'm not sure about how I would define great, but they're going to inherit a boatload of debt. Joe and the gang, back to you.